All right, traders, welcome to today's recap. This is Christian Farmer at Tribeca Trade Group, and it is Wednesday, February 26th. So, midway through the week, even though to me it feels like it's a Thursday already, but it is what it is. It has been a pretty long week so far. So, I have theme of the day. Markets deviate a bit. I'm looking for a better theme than that, but I think that's just what it is. And why I kind of put that there, I thought there was some interesting moves kind of between the indices. You had Qs, they outperformed for the day up. They were actually up a 0.5% today. But if you look at the SPY, which finished down 37 basis points, and IWM got crunched today, down over 1%. So depending on what you looked at today, you may have had some names that were profitable for you, and then maybe some other names that did not do so well. So a couple observations for the day. Of course, small caps just looked ugly, down 1.6% through, opened up green and sold off through the day. But a very, once again, headline-driven market. It felt like every time this market was trying to stabilize and perhaps turn the corner and go higher, I just, I've obviously have a Bloomberg terminal, and I get a lot of headlines, and it seemed like every time the market was trying to turn, there would be another headline about this was going like, this country has a case of coronavirus, and this one does now, and these in the U.S. and New York are suspected. So we're kind of in a very headline-driven tape right now, and who knows how long that's going to last. I don't think that goes away anytime soon. To be realistic. One of the things that I said today, when we got this little bit of a bounce, I made some comments in the room. Let me see if I could just bring them up quickly. I've been keeping the comments kind of to be pretty concise, but and not just Sometimes I like to kind of give more comments when I think there's something really that pressing. But I'm not trading as much. But I said it, after 1.5 hours today, so right around like 11 o'clock today, they said, "Hey, we got the bounce." And I said, I'm not exactly sure, we're going to get much more than that, considering the virus headlines that just kept on coming out through the day. And I said, you have to be realistic in the short term. And most of my trades that I was wearing, some shorter term trades, I just decided to take off. I had, and I'll go through the charts and kind of explain why too technically. But some of the shorter term stuff, I had some now calls at service now. I thought that would be a decent play on, Salesforce earnings, and I just thought it was a name that had gone down enough for me to play. But this kind of helped me out quite a bit, and I was able to get out of some Microsoft calls too that I had on for not this week's expiration but next week's, where I just kind of kept on averaging down a little bit, scaling in. Just I was doing this pretty small on Microsoft, but I was able to get an average price down to the average price down to 185, and I was able to get out of them at around 235, somewhere in that range. And I think I bailed on the last piece. I even tried to roll the Microsoft, and I said okay, because Microsoft got to, that's where really I think the market webs help a lot. I know this name, they just took down their guidance for, I guess, the PC business after hours, and the stock's not reacting too much to it. But we got right up to here. Here's where I took off a good bunch of my trades. We got up to here, which is the top of value for the day, and I took off the remaining portion of my March 6 calls. And I said, hey, well, if this thing's going to break value, I'll put on, I'll kind of roll the calls out, because I don't think Microsoft calls are that expensive. So that's one name. I've been, talking about how difficult it is to trade options in this market with the VIX above 25. It's a whole nother game when you're dealing with a VIX this high, because option prices are so much more expensive. But nevertheless, I rolled out the calls, and I didn't like what it was doing, and I took them off here. And then we started to get more headlines about the virus. So that's it. You can see I really, I decided to just take advantage of this little bounce and just get out of some other trades. SE was a really nice trade for me that I had on for a while. It reports next week, And I've seen too many trades that I've been holding that I had really nice profits, and they've come in so far. So I saw one put buyer on the tape in SE, and I was like, all right, I'll just take this thing off. So, and granted, I think this thing topped out above 50. And that's it. I've got some team calls on. I think the CEO is on Kramer tonight, so I figured I'll give that a shot for some calls for next week. But I tried trading a little bit of Zoom today, and I just don't want to have a ton of risk here. I know some people are maybe expecting something out of Trump's speech at 6 o'clock. Maybe he'll rev up the markets a little bit, but I honestly just didn't like what I was seeing. I'm waiting, as I've been saying for the last couple of days, for some boxes to be checked. The VIX, stayed elevated all day long, 27. I'm just not in a rush really to extend myself, even though we've got I know this seems like a good opportunity to most to see the market down this much, and people want to be buying that dip. But I'm okay letting this play out. I want to make sure that we get a sustained bounce, and not like the one that we got this morning. Right, this morning was kind of what I was looking for. I think the market was up around the highs, up 1%. I said that's it. I'm not expecting a recovery just yet. There's too many things going on. There's too many moving parts. There's too many companies canceling conferences, reducing their their earnings numbers, and so on and so forth. So I think there will be time, but I'm not going to go crazy putting on trades, because this week kind of hurt. It stung. Any short-term call positions I had on, you know, basically are going to go to zero, right? I mean, that's just the case when you're dealing with short-term options. And I had my P&L hit 2020 highs just on Wednesday last week. So it's amazing how quickly things can turn. And when you're dealing with as much speculation as this market has. And one of the things that I talked about too was the ETF fund flows, right? A couple weeks ago, there was $20 billion that were added into U.S. equity ETF, U.S. equity ETFs. $20 billion of inflows in about 2 weeks in the beginning of February. Well, now there's about, I think, $16 billion that have come out over the last 5 days. So that was a lot of fluff in the market, and that has to be essentially drained out of the market. So that's the process that's going on right now. And of course, the market is kind of the tape is kind of glued to where and how much this is going to the coronavirus is going to spread. So that's not the kind of market that I like to really staying glued to headlines about there's a suspected case here and there. That's just too difficult, I think. I'm not a doctor, and that's not that's not healthy trading. To see this market move on every little headline. So for now, I stay nimble and try not to get overexposed. As I've been saying now, day after day, and waiting for some more confirmation. So again, I've been showing a checklist just about every day for these videos. I need the VIX to stop going nuts. I want to see the VIX. There was a slight, as I talked about yesterday too. There was a slight because S&P did. Where did S&P finish? Down 30 basis points, and the VIX finished down for the day too. So there's a slight divergence there, not much, but I think things are starting to get better, and the risk to return is starting to get the reward. Am I saying that right? The I guess how risk is lining up is starting to get a little bit improve, right? The risk is starting to be to the upside rather than the downside. I think we're starting to get pretty washed out, but it could take a couple more things. Like, I do think there will be some cases that will be reported in New York City. So that we're probably still going to have a knee-jerk reaction when that happens. What did particularly well today? Really interesting. China. China held the gains for, they were up over 2%, but it seems, and there was a nice tweet out too, all kinds of crazy stuff, I guess. But I'm going to bring this tweet up. Now, of course, China is doing a whole bunch of things like giving people money, I guess, but I thought that this was really interesting. The activity in China is on normalizing trend. So they've done their part to kind of contain things there, and it seems like it's improving a little bit. But the problem is it's gone global, as Mr. Jens has mentioned. So we're dealing with a lot of stuff here, and I think you want to be as nimble as possible. You can see the market is, I think, selling off here a little bit after hours. So I think also, just kind of final tidbit here, as I'm trying to keep these videos a little bit shorter. I think just watching, the value areas really kind of help me a lot. To stay as neutral and to away from the headlines, and just basically say, as I've done in the trading room a few times, like, hey, if we get below value, I'll probably buy some puts. There's a couple of traders in the room today who bought puts like right when we started to kind of lose momentum to the upside. That was a great trade. Really, really, really nice. And then you could still see some plays like Gilead. It seems like whenever there's more headlines about the coronavirus, we start to see call buying in Gilead, and Gilead catches some momentum to the upside. Also stocks that, I don't know, are people really going to buy Peloton bikes, instead of going to exercise just because of the coronavirus? I don't know. But if you want to day trade these things like this, I believe Zoom is, I tried trading Zoom a little bit. Zoom's going to report next week. It's doing a little bit of some healthy consolidation up here. I think this is probably the best way to play it. Workday just announced that they're canceling a conference, so that's it. I'm still looking for some more confirmation to kind of take a bigger swing at putting some risk on. Like I said, the VIX was one thing. I didn't like to see this, right? Market breadth just get worse throughout the session. So, again, I think taking small shots on some trades are fine. But at this point, putting a large amount of money down, if it's not for the long term, and again, I think knowing your time frame is important. I added a little bit to the tactical portfolio yesterday. So, I'm doing things like that I think are good for the longer term. But I think for like shorter term trades and really sticking my neck out here in options, probably not a great idea for me until I see a little bit more, confirmation and some more boxes that need to be checked along the way. All right, guys, that's it for today's video, and I will be out on Thursday. I'm traveling a little bit with some Tribeca Trade Group members out to Vegas, so no video tomorrow night, as well as Friday, although I will be in the trading room and trading. All right, guys, have a great night. See you tomorrow.